we've got about 6 years before everything changes. We thought money in the bank was safe. We thought our house was safe. We thought the system was there for us. But it's not your money because you don't actually own your money. The moment you put it in the bank, your future self is getting poorer by 11%, right? Remember we talked about the future self? And if you buy the S&P 500, what was it making? About 11% a year. So if you buy the S&P 500, your future self is not going to get any richer for the risk you've taken locking up your money for 10 years or 20. People know their future is fucked and they can feel it. They have a sense of desperation. You see then the same cohort of kids in their 30s and the S&P 500 doesn't make you any money. Real estate doesn't really make you any money. Gold actually lost you money. It's supposed to maintain your purchasing power. So once you start moving into that world, okay, this is a whole different world. Now the guy with $1,000 can get rich.
Time is running out. Raoul Pal, CEO of Real Vision and seasoned economic analyst, warns that we have only 6 years to act before inflation and currency debasement overwhelm the global economy. The current financial system is under immense strain, with record-high global debt, relentless central bank interventions, and excessive money printing eroding the value of currencies and savings. Traditional economic structures, weighed down by inefficiencies and centralized controls, are making it increasingly difficult to build and preserve real wealth. According to Pal, traditional finance, centralized banks, and fiat currencies are rapidly losing trust and credibility. In contrast, crypto offers an alternative built on transparency, scarcity, and decentralization, qualities fiat currencies cannot compete with. Unlike centralized systems, crypto operates independently of government control, providing a more secure and inflation-resistant foundation for value. As the cracks in the traditional financial system grow, Pal views crypto as the ultimate solution for navigating economic uncertainty. Stay tuned until the end of the video, where Raoul Pal shares his winning strategy for leveraging crypto as a safeguard against inflation and financial instability.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Crypto is just a technology. It's a lot of things to many people. It's just a database that's better than databases in the past. So right now, your database might be in your spreadsheet. And let's say you and I have a bet. You write it down there, and we get a third person to say, yeah, that was the bet they had, and this is what's happened. Okay, that is how databases, that's banks, that's pretty much everything we do in society is in this ledger system. In the old world, we both had our gold.
Yeah.
And we'd stick it in our safe or bury it in the ground. That gold was your gold. This was my gold, and I might try and fight you for it. That's what pirates did. Okay, and then we invent banks. And banks, we put it in there, and they give you a note to say, Stephen, you've got one of those coins. Raoul, you got one of those coins.
Okay, so we've both got a note now saying that.
Yeah. And now we trust this bank to give us our coins when we want them because they're our coins. Mm-hmm. Okay, that makes sense. Safe as a bank, as people would say. The issue is in this world of smoke and mirrors, what's known as fractional reserve banking, they have taken those coins and given them to somebody else.
They've given my coins to someone else?
Yeah, they've lent it for money. So now that coin is not in there, but they've been given the money. So usually when you're just, if everybody pulls all the money out, there's not enough money. It's called a bank run. We've seen those recently, but that's a classic thing. So it's not your money because you don't actually own your money. The moment you put it in the bank, what you've become is in fact a debtor to the bank, or a creditor to the bank. So you've lent them money and you get some legal redress that if you've got less than 100,000 euros, pounds, whatever the currency is, generally that's protected by the government, that if the bank goes bust, then you get your money back. But anything beyond that, you don't get anything.
But I've got a piece of paper.
Yeah, I mean, shit. You don't own anything. Now, it's so big as a problem that so that was 2012 European crisis, exactly this. People didn't own their money. That person walked off with it, asked the bank for it, the bank didn't have it, nobody's got any money, where it's all gone. That's the same Ponzi scheme we talked about when you buy a house and use the cash flow to buy another house, right? If somebody takes away what's known as the collateral, suddenly it's all gone. But the issue is actually bigger because 2008 proved another thing, is that nobody owns any. So the whole system itself is leveraged. So, for example, back in that time, the average US government bond, which is the safest thing in the world, was leveraged up to 30 times.
What does that mean?
That means 30 people thought that was theirs. So now you get this global infrastructure layer of which people can invest. Now, let's go back to the example of AI. AI, 99% of people listening to this will not be able to invest in it, apart from buying some of those big public companies, because they're not accredited investors, they're not allowed, they don't get to see it, it's an insider, all of this stuff. This is the inverse. It is fractionalizable. So a Bitcoin, you don't have to buy one at 60 whatever thousand it is today. You can buy fractions. So remember we talked about property, and the guys who own the big high-end property make all the money. None of us can buy the $50 million apartment in Manhattan and then do it up and flip it for $250 million. Now, blockchain, we can all put 10% of our paycheck in it.
Do you think people should?
Yeah, and more. But the point being is this is the only globally homogenous asset on Earth. It's the same in Nigeria as it is in Brazil, as it is in London, as it is in Silicon Valley, as it is in India, as it is in Papua New Guinea. And everybody is on an equal footing. You can put the same percentage of your worth in it. Okay, that is mind-blowing. And it bypasses the banking system, the brokerage system, and all the other incumbent things that get in the way of a Nigerian buying an international investment. So we've got a playing field that's leveled in the fastest growing technology of all time, in the fastest appreciating asset in price terms of all time, in the shortest period of time, that is globally available to anybody. And then you realize, holy shit, okay, this is important. Now, why that's important is because having more investors in it means the asset becomes more valuable, which means you're more likely to secure it. People want to join the network to earn some of these tokens, to secure it. The more use cases get built upon it because people are making money, and it bootstraps it. It's behavioral economics. It's an incentive-based system to bootstrap the most ridiculous startup idea of all time, which is I'm going to entirely disrupt money and create a new internet. I mean, that's laughably stupid.
Crypto stocks skyrocketed following Donald Trump's election victory, sparking optimism for a pro-crypto shift in U.S. policy. With Republicans poised to control the White House and potentially Congress, major crypto companies experienced significant gains. Coinbase led the rally with a 31.1% surge, while Robinhood and Marathon Digital both jumped nearly 20%. US-based miners like Riot and CleanSpark also posted impressive double-digit gains. Trump's crypto-friendly stance, combined with Bitcoin's record-breaking climb to $76,500, has further fueled enthusiasm across the industry, marking a pivotal moment for the future of digital assets.
If we'd have all been given shares in Facebook when it started, we'd have all been hilariously rich. But we did. The VCs got it, and then it went to the public market, and then you have to have a brokerage account, you have to be approved, right? What this is happening, you buy an Ethereum token today, if Ethereum ends up becoming bigger and more uses, your token value goes up. It's as simple as that. So you get to participate in an entire technological revolution really simply from your mobile phone. And you don't need anybody to approve it or do anything. Yes, there's regulation stuff, but simple stuff like that, it's pretty straightforward for almost everybody in the world. So therefore, we talked about how do you invest in your disruption and the future of technology. Okay, here's one where you can really do it, and it's easy. You just open a crypto account with one of the big crypto providers, Coinbase, Kraken, Crypto.com, whoever, Gemini, start some. I'm not going to say no, but you will go down the journey that everybody goes down, which is the easiest on-ramp is the best. Revolut, whatever, I don't care. Do it. Get a feel for what it's like to own an asset that goes up and down a lot, particularly down. When it goes down, it makes you feel terrible, and you've got to learn about how to deal with it. And then, because it goes up over time, if you don't do anything and you've chosen a good quality asset that's provable as an asset in itself, it'll probably go up over time. In fact, highly likely to go up a lot. And then you'll start thinking, do you remember Raoul saying that the bank owns the stuff and I don't own it? And then you might say, oh, but the magic here is, unlike the bank where I can't take more than 10 grand out, I can put it all on my little ledger device. Because
what's a ledger device?
A ledger device is, it's a company that provides it, but what it is, because this is just an address on a blockchain, and think of it, it's like your mailbox. You can send stuff to it, but you can't actually take it out. Like your email. Somebody can't read all your emails, but they can send you email. Well, that part that's private, that secure pass key, essentially, well, you keep that to yourself and it's stored on a device. And there's a complicated way of doing it, and you'll have to go through that, which is you have to have this seed phrase that does it. This technology will change quite soon, fingerprints, face prints, and a bunch of other stuff. But basically, a little USB stick will secure that you can go and put in the safe or go and take it to your nan's house or whatever it is, can secure your money that it's only yours and nobody can take it out. Also, there's a famous example of the conversation of gold in the United States, and it's been done in many countries in the past. The good thing about this magic internet money is you don't have to physically cross borders with it.
Yeah.
Think of all the Jewish people who had to take money and diamonds and gold out of Nazi Germany and out of Europe. It was hard to do. Here, You don't have to do anything. You just need to remember a seed phrase. This is my 30 years of expertise is this one thing, which is asset allocation. So firstly, the average person watching this is you need to allocate to this. End of story. If you're going to start somewhere, start with Bitcoin. It's just easy to do. It's widely available, through different, whether it's a credit card, anything, just do that. I don't care. Do that. And do it with as much money as you can afford to see go down 60, 70% and don't care. And expect that to happen, because that's what you have to see the long-term 150% a year. It's included within that is these downsides. Then I want you to put in some money every month, regardless of price, to build your savings in this exponential asset that goes up. Okay, now you're set. You're on the journey. And then you want to figure out, how do I make the most money? Like you, I had Bitcoin to start with. I switched all of my Bitcoin into ETH in 2020 in Ethereum. And so I just owned that plus some NFTs and a few other bits and pieces, but generally it was that. And then in 2022, at the bottom of the bear market, I started to see the price of Solana, seeing like it wanted to outperform Ethereum. Now, Solana, much like your thesis, I saw this massive developer community, passionate retail, and a difference in the technology. Because these are all basically distributed companies that sell block space. So you want to look for attractive block space. Bitcoin, it's the secure one. Ethereum, it's like the world computer, and everybody's building on top of it. Solana, faster, cheaper, feels more friendly, efficient. Yeah, it feels more retail. And I saw that, and the speed of which they can do things and the innovation and the developer community meant that I started switching and then switched all of my ETH outside of my NFTs, where I collect a lot of art, into Solana. And I've now been switching part of my Solana into SUI, SUI. And as a disclaimer, I'm actually on the board of the foundation, but it's like the next big chosen one. It's the group that came out of Facebook that built Facebook Libra. So what I'm trying to do is maximize my return. I'm a mercenary I'm passionate about this space and what it means, the technology and how it empowers people, how it can change the third world, how it can change the internet. But I'm also a mercenary for my own capital and for anybody else I can help. Now, it doesn't mean I always get it right. So in your particular circumstance, I would look, you'll probably be fine over time, but you're not maximizing your return. But do you want to take the risk? Do you have the bandwidth to do that? And these are the questions we were talking about with work. It's the same thing. How much do you want to go down the rabbit hole? How much time do you have to invest versus the expected upside?
Raoul Pal emphasizes that safeguarding and growing your wealth now hinges on strategic investments in digital asset. He believes the traditional financial system is crumbling, rendering old methods insufficient. Pal suggests starting with Bitcoin by investing only what you can afford to see fluctuate and consistently adding more over time, even during price dip. This disciplined approach, he explains, positions investors for long-term gains. In his view, this strategy isn't just the best option, it may be the only way to navigate the challenges posed by the declining financial system. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.